Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intent. Good morning, guys. Let's see what we have. The month is now 3 days old, and we've already seen price hitting multiple average levels. First, it hit the bullish wick average and the median for a bearish monthly close, giving us over 7% down on the first day. Then those levels held perfectly, and we got a rise back up. Now on day 3, price is already hitting the monthly bearish wick averages. None of this is new. If you watched the previous video, we had all of these levels marked out beforehand. Bitcoin has also hit the monthly breaker, the SR level I showed in the last video. So right now, this is more or less the decision point. Either it turns into a range and rejects around here for the whole month, or price breaks up from here. Of course, it can make a few attempts on the lower timeframes, but once it breaks above cleanly, I would aim for the next higher area. If you're looking for shorts, then this area here is monthly timeframe resistance. There are several scenarios. Scenario 1, rejection price rejects here and moves back down toward the range low. For that, we need to see weakness and loss of support levels locally. Scenario 2, clean reclaim price reclaims the level with no problems, trapping shorts. In that case, the next targets higher become active. Scenario 3, multi-HL structure price continues the pattern it has now. Higher highs and higher lows, basically a multi-1-2 structure. Your job is to decide which scenario you want to trade, or whether you trade all of them. You wait for the signals you need. If you want longs, wait for a pullback to form another higher low. If you want shorts, wait for local weakness and short the breakdown. There are plenty of ways to trade this. At the lows, when it hit the 3-month level, I said this could be a nice swing long because the invalidation is very close to the low. Some people prefer to wait for a reclaim of the SR level, which is also the value area low of the range. Re-entering this value area usually means we have a chance to retest the point of control, which is currently around 112K. But we must go step by step. First, we need a reclaim. Until then, this is still resistance. Personally, I don't short. Yes, that means I miss some moves, but I stick to my analysis and what I believe is right for me. Everyone can do what they want at these levels. If someone catches a short on the rejection, I'm happy for them. If someone catches the long on the breakout, I'm happy for them too. Stick to your plan and the decisions you made before entering the trade. Now let's switch to the yearly time price chart, where we have the FOMC dates. The FOMC date is on the 10th of December, and usually we see a reaction or even a reversal either before the FOMC or on the FOMC day itself. For now, the low was made 9 bars before the FOMC, which is acceptable. But this does not protect price from making a new low. It could still make another low at the date or around it, as we saw previously at the 74K area. The question is simply how likely it is. For now, as long as Bitcoin remains in the lower part of the range, it always has the chance to reject and make a deeper move. As soon as it breaks up, we can say the low is likely formed. So it always comes down to the reaction we see. A good reaction equals reclaiming resistance levels. A bad reaction equals rejecting from them. That's the simplest framework for reading reactions. Right now, price is slowly approaching the trend line we marked for the weekly cycle low. This currently lines up with the bearish monthly breaker and the daily 50 EMA, which would get its first retest at this price since the breakdown. Usually, of course, we get some reaction around strong confluence zones. So what to look for here is the same as in the previous video. Scenario 1. Rejection, the rise ends with a rejection, and price stays below the SR level. This keeps the chance open for a new low. Whenever price is below resistance, a new low is always possible. Scenario 2. Reclaim price reclaims the trend line, maybe after a few attempts, and continues making higher highs and higher lows toward the next target. So with that said, if you're bearish, this is exactly the area where you normally want to look for shorts. And of course, we need to remember, trends don't go on forever. Up or down. At some point, the downtrend should break. Breaking the trend doesn't mean price can't revisit the same level again. It can break, go up, and then come back for a retest. But if it's a stronger move, then yes, we could see an impulsive move up with shallow retraces. First, to trap shorts, fuel for the move. Second, to stop people from getting good long entries. Very similar to what happened during the break from 74K. Anyway, the point I want to show here is that these levels are crossing each other. If price spends more time here or moves sideways, eventually time and level confluence will align. That's where things become interesting. As you can see, it's nothing new compared to what I explained in the previous video. That was the preparation. Now we simply observe the reaction and decide what we want to trade. Now let's take a look at the momentum and then switch to the lower time frames with the local levels. Here we switch to the monthly chart first. By the way, I sometimes look at Trader's reality indicator with his vector candles. On the monthly time frame, there aren't many of them, so it's actually pretty useful. Let's take a quick look. 2011 to 2012, we had two vector candles. They formed the low, and the next rise, once the low was confirmed, fully recovered those candles. 2014, a small vector candle formed, and the next monthly candle fully recovered it. Then we had another one slightly lower, which more or less marked the bottom of the bear market. The next candle didn't recover it immediately, but the move that followed eventually recovered it completely. No new low or close below that vector. 2017 bull run. Several vector candles appeared during fast moves down. Every time, the following moves recovered them fully. Pandemic crash, 2020. Massive red vector candle. The next candle fully recovered it, and that candle marked the overall low. 2021 bull run, same story. Price peaked, dropped sharply, left a vector candle behind. That candle was almost at the bottom of the move. The next move recovered it fully. Around this time, I also had statistics signaling a top formation. It made a slightly higher high, then went down. 2022 bear market. Here it was similar to 2014. The vector candle didn't get recovered immediately. It took some time and a few new lows before the final recovery. Current situation. We now have a fresh vector candle formed from the recent drop. Based on everything we've seen before, these candles usually form the low of the move and get recovered on the next moves or next candle. Only rarely do they behave like the 2014-2022 examples, where we get a few more lows first. But statistically, that's the low probability scenario. So if this current vector acts like the usual ones, then price should not close below it before recovery. And in many cases, Bitcoin even made a new high after recovering it. Don't shoot the messenger. I'm just describing what I see. If you see something different, tell me in the comments. I'd like to hear another perspective. About volume. Every major recovery I can remember, and even if you look just at volume, shares one thing. The move off the low always starts on low volume. People often think that means weakness, but it never is. Volume comes later during the breakout or the impulsive part. I saw the same disbelief. In 2021, low volume rally made a new AT8. After the bear market low volume bounce made a new high 2 cycles before that. Same story. It doesn't mean it always works this way, but it's worth journaling as a sentiment signal. You will see the pattern repeat. Right now we have the same situation again. A big red aggressive candle down, and a high chance it gets recovered before any monthly close below it, with a small chance it acts like 2014-2022. Which scenario you want to trade is up to you. Momentum. On the monthly time frame, momentum remains down unless price breaks 121K this month. Based on the stats, it's possible, but only has around 30% probability. Not zero, but low. 2-week time frame needs a close above 116K. It closes in 4 days, so we will look again then. Weekly time frame, this pivot moved lower. Last time it was at 100K. Right now, price is at 93K, and a close above 97K would cross momentum back up. In bull markets, that often marks the low of the move. In bear markets, it still gives a strong push, so it will be interesting whether price can reach the 97K area this week. If not, we will check next week's pivot. For now, pressure remains down as long as price is below 97K. Hashed 5-day momentum crossed up as long as Bitcoin stays above 86K. 3-day momentum up as long as Bitcoin is above 81K. You can see that all higher time frames are slowly turning up from the lows. The monthly remains down, but lower time frames are shifting upward. We will need to see how it behaves once these time frames reach their momentum highs. Does price break above 121K? Bullish continuation. Or does it make a lower high, creating bearish divergence with the monthly? For that, we need a rise first. Daily momentum, almost at the highs, stays up as long as Bitcoin is above 88.7K. This can signal a pullback or a new low forming bullish divergence, or it can simply hover at the highs while the 3-day, 5-day, and weekly push momentum upward, exactly like the 74K move. So for now, watch the 88.7K region if price retraces. Not a target for me, but if price gets there, I would check for reaction because it's a key strength-weakness area for momentum. Now let's look at today's averages and the levels. Based on today's averages, we've already seen the average gain hit. By the way, yesterday, price hit the average max, which is rare. It usually means something is changing. Sometimes it's a trap. Sometimes it's an impulse we actually want. For today, the average gain has already been hit together with the monthly median wick level and the monthly breaker. The average loss would take price back inside the Monday range and below the monthly open. That's actually an area to watch if we get a retest because it was an SR level previously and it can act as one again. But before that, we have a local level we need to respect, and we go step by step. First level, 4H order block, local SR. This is the first local support area. Inside this 4HOB, we have today's open range and the 1-hour swing low, structure level. That's the area I'm watching now. If price comes back to this level, it's local support. From here, we could see another grinding structure up, making another higher low and continuing upward, similar to the lower structure we saw earlier. Recently, I've seen Cohen's talk about an interesting pattern he calls T&T. I need to look into it more closely, but it's actually a nice finding. If this pattern repeats, we'll definitely use it in the future. The idea is basically structure forms on the lows, then an impulse, then an ending structure, reversal potential. I've seen this structure many times myself, and when you expect this kind of structure, you often find an order block exactly where we are marking it, which is why these are levels I trade. Based on that, we would expect another high or continuation until a level fails. Once a level fails, structure shifts, and that's our signal. Summary of today's local setup. This is the first area to look for longs today. Only if this level is lost and retested as resistance, then I look for the lower levels. A wick below is fine. Below we have the monthly open and Monday high, which are larger levels than the 4HOB. But the first reaction should be watched here, because to keep the local higher-low structure intact, the new HL would form in this area. Here, you can look for your personal signals that trigger a trade. Momentum, 1H and 4H. 1H and 4H momentum are not in a perfect place to open a long, but on these T&T moves, we often see bearish divergences while price makes new highs, which is fine. Not every top will be a perfect 3-touch top. Sometimes you get only 2 touches. Sometimes price grinds up without breaking down and continues the impulse even if lower timeframe momentum is high. So momentum should be used as confluence, not as the main decision maker. SR comes first, momentum reacts after. Trade plan, first level, 4H OB plus open range plus 1H swing low. TP1 VWAP on the rise. TP2, a new local high. If this level breaks, that trade becomes a loss. Then I wait for lower levels or a sign of strength by reclaiming this same level again. This is the risk management area if price dips into it on the next move down. If price moves higher first, then this is obviously not the same setup. Keep that in mind. Final notes, on the higher time frame, I'm watching what price does around the monthly breaker plus trend line. On the lower time frame, I'm watching this local SR zone first. Keep in mind it's an area, but the first actionable level inside this area is the local OB plus open range 1H swing low with some volume confluence inside. Hope that was helpful. Wish you a good day and see you in the next one.